Okay, guys. In this video, we'll be talking about another strategy, and I call this the moving average crossover strategy. The moving average crossover strategy. In this strategy, I'll be using uh, only moving averages, but this time around, we're using exponential moving average. Let me switch the to a forex pair. I don't want to use gold for this now. Gold can be very funny sometimes. So now this strategy, of course, as always, is just for buy. It's both for buy and for sells. So for buy and sell opportunities. Now, what do we need for this strategy? You need either of two time frames, either 4 hours and 15 minutes or 1 hour and 5 minutes. Okay, 4 hours and 15 minutes or 1 hour and 5 minutes. Those are the time frames that we need. So we're going to start now. 4 hours is for analysis and 15 minutes will be for entry, while 1 hour will be for analysis if you are using a smaller time frame, and 5 minutes will be for the entry. So let's start. On the 4 hours, I'm going to start with 4 hours and 15 minutes first. It's actually the same idea. So 4 hours and 15 minutes. What I'm looking for, let me use a different instrument. Anyone? Either one. USD JPY, Euro USD, GBP USD, they all give us the same result. Let me delete that. Okay, so let me see USD CHF. Pretty cool. So what we are looking for first is a trend. To find a trend, you need to go to a higher time frame to know which trend you are currently in. Right now, we have a downtrend that is either reversing or retracing. Okay, so if this current move goes back up and starts going up, then we have a trend change. I would always like to look for a trend that is actually in continuous move like this. This is a good one. Well, this looks like a reversal is about to occur. We have a head and shoulder, a head and two shoulders here, and we expect price to break below this point. So if price closes below this point now, then we will be selling down to somewhere around here. We're selling down to somewhere around here, with first take profit around here and second take profit down here. Okay, so sorry, I seem to digress a lot. All right, so I'm just going to pick any one instrument. Let's just take this. So we have to find, sorry, let's go back to where we started. We have to find two moving averages. Okay, the first moving okay, maybe two, or worst case scenario 3, but 2 is compulsory. The third one is optional. The first moving average is the 50 moving average, but we're using exponential moving average this time around. So I'll go to moving averages, and I have 50 exponential moving average, and the color will be blue. Okay, so I'll make it a bit thick, so I'll use the second and click OK. Now this is a good one. Our blue moving average is intact. The next is to bring in a second moving average. Go to insert indicators, moving averages. This time around we'll be using a 14 moving average for the second one. So I'll take 14 exponential still and make the color red so we can differentiate between them. And make it a bright red. Bright red is cool. So I'll click OK here. So now this is a safe trade strategy. What you're looking for is for these two moving averages to cross over. They cross in either direction. If either red crosses over blue down, like it did here, then you'll be expecting price to continue down, or until it crosses back up again, then it will continue up. Can we see that now? So if you look through this chart, if we just go back through this chart, let me just flip back through the chart, you'll see it happen almost everywhere. When this cross occurred this way up, you see that it continued up. Okay, when it crossed down, it started going down. When it crossed back up, it started going up, and then it crossed down again. What happened? It fell all the way to this point, and then it crossed up, it rose to this point, it crossed down, it fell to this point, and then now it's about to cross up again. If it crosses up, that means it will rise up again somewhere around here. So this is what the moving average crossover really is about. Now, where we need the third moving average is usually for confirmation of trend. Sometimes it looks like an uptrend, it might actually be a downtrend. So I like to bring in the third moving average to help cement our trend. So the third moving average is a 200 moving average, which serves as support and resistance. And I like to make the color something in the range of gray, dark orange, gold, or yellow. So let me use gold for now. And this is it. So right now we have a downtrend that is about to convert to an uptrend. If it breaks this trend, usually I will use the 200 moving average. If this cross occurs, I will use the 200 moving average as my first take profit. Remember, we are still doing this on 4 hours. Don't worry, we'll come to what we do with 15 minutes now. We're doing this on 4 hours. So what I want to do is put a line where the 200 moving average, just below the 200 moving average. So I know this is where my take profit will be when this cross occurs. Okay, so now how do we now take a trade with this? When the cross occurs, usually there will be a pullback to at least the 14 moving average. Now I would not take a trade on this. I will be taking the trade on the smaller time frame, which is the 15 minutes. So you will see that the cross has occurred already here, but it has not occurred on 4 hours. By the time it will be occurring on 4 hours, it will pull back down a little, okay, before it finally goes up, which is why we don't want to trade until this cross actually occurs, because it might come against us. So now on the 14 moving average, we'll see that it's actually a buy. It's buying, or it has started buying already, because it has crossed over the 200 moving average. It's on the upside of 200 moving average, which means we'll have an uptrend. So what we're looking for is for price at this point now to pull back to 14 moving average after the cross. Take note of that, after the cross here. So first we are waiting for a cross on 4 hours, and once the cross occurred, then we switch back to 15 minutes now, and then wait for these candles to come back to 14 moving average. By the time the cross occurs, price may be somewhere around here. So we're going to wait for price to pull back to the 14 moving average, and then we execute a buy. So from here, it will be buying up to wherever our line is. Can you see now? So when it pulls back, by the time we are entering the trade, we'll be entering the trade as close to the ground as possible. So when it takes off, it will be going all the way to where our line is up here. Okay, so this is how we trade the moving average crossover. Now if you want to do it on a smaller time frame, maybe you are not a position or swing trader like I am, probably a scalper, then you want to do that on 1 hour. So go to 1 hour, wait for a cross to occur. The cross occurred here, it's a long time ago. And then another thing we are seeing is a cross over the 200 moving average, which is another strong indicator of a continuous uptrend. So I would just wait. So if the cross occurs like this on 1 hour, then I'll go to 5 minutes and wait for a pullback to the 14 moving average or to the 50 moving average, and then buy up from there. So this is just as simple as the strategy goes. Very, very straightforward. You can apply it anywhere. In fact, you can put it to practice starting today and see how productive your trade will be. It's a very safe way to trade. Okay, it's a very safe way to trade. If you wait for this pullback, then your stop loss will just be at the cross. Okay, your stop loss will just be at the cross on your actual trading time, which is what will save you a lot of movement. So if it pulls back and closes below the cross, if you're in an uptrend, then it's not an uptrend anymore. It's about to change to a downtrend. But if it turns around and if it's actually an uptrend, it shouldn't close below the cross anymore. You take note of it. See, everywhere you see a cross, once you see a cross, price doesn't go above that cross anymore until it actually turns around. Can you see that? See the cross here? Price never comes below that cross anymore. It just keeps going up. So that is why we always wait for the cross to occur first. Only if the cross did not occur, like here, it was supposed to cross, but it failed to cross and it continued, and that's why you see price keep crashing down. So if I had seen it like this and expected it to cross and then I do a buy, then I'll be in a heavy loss right now. So I think that's about it for these strategies. Pretty straightforward. Pretty straightforward. If you have any questions on this, just test it out. If you have any issues, feel free to contact me and we'll see how we'll straighten out those issues. Thank you for watching and see you in the next strategy video.